Good morning, guys. You can hear me? Let me know if I have a sound check. I was working on my computer yesterday, put up a couple of new screens. So I have two new 27-inch monitors on the bottom. And yeah, it's feeling pretty good. So starting off today, first of all, welcome to this Friday, November 21st. I got this Friday. Yesterday was one of those beatdowns. Yeah, it's like massive market beatdown. You just kind of feel it, still feel it, reel from it. So far, the market has been probing lower in the overnight. It's been retraced a little bit right now, but it's pretty much right at the lows and ready to push the boundaries again, I guess. We just have to see how most of the day shakes out there, but definitely looks like we have a potentially potentially weak day ahead of us. Now, it could everything could turn around pretty quick. I mean, if yesterday was one of those blowout days or shakeout days, if you wish, this could turn into to be just the opposite, a nice retracement day. But it's and hold my judgment on that and let that prove itself. I'm not going to assume that happens by any means. News we have for today, and not a whole lot. We got PMI composite at 9:45, consumer sentiment at 10, wholesale inventories at 10 as well. So 9:45 and 10, we have news coming out today. But I think the story really is that given all the earnings, the earnings reports we have come out from earnings report we have come out from Nvidia and the crazy sell-off we had yesterday in the F1. You can see here on that F1 how brutal that whole thing got. Right, we were way up here, almost reverse retesting 6,800, and then finally finding ourselves down at the very low 6550s in one day. It's like, yeah, okay, that's that's a beat down. So we are down here testing the support. So this could turn into a what you would call a retest failure at the lows, or it could turn into just further selling. Anyone's guess right now. I would try to trade the retest failure, but right now you could trading an F1 retest failure. It's as you can see the range here. This just had to take it a little bit less aggressively. But if this in the bigger picture it turns into be a retest failure, we could see a nice retracement day happening. If not, and they start taking that lower, next attract on the downside is going to be 6480. And as you keep going here, we're going to be down here in territory we haven't been for quite a while. This is July 6 months ago. So there's 180 day in this chart. So this is the lower end of the range. And then you can see how this thing's going to start tapering off pretty good here after that. So we have some interesting stuff going on. But the observation here, retest failure potential set up in the bigger picture. That doesn't mean it's going to be a reversal day today by any means, but it does mean that it could hold, and if we could see at least a range bound trading day. Now, if they keep selling going into the Friday, yeah, it's going to be one ugly Friday. So we'll see. But early on, looking to sell strength at least to get started. So at this point, against the 65 80s, move this my cap, this F1 away. So against that 65 80s or 85, 85, 65 85. 65 95. They probed right above that here for a little bit here early on, and 6605, 6615s, and I would look at this at about that 6615s. I would probably take off and not take off the I would take off the long bias or the short bias and start looking for retracement. Right, so at that point they have that imprint there. That's how far they bounced it off the low yesterday. And they came up, reverse retested that area, could not hold it, traded back down again. And of course, close towards the low. So that's a good area to, if they can take out that 6615s and trade above it, we may have a good shot at starting a retracement trade to the upside. So that would be the aggressive way of looking at it, and on that retest failure, working out, and then setting us away on a move to the upside. once you start retracing these single prints, 6660s, start retracing the F single prints, I think we are in a good spot. So right now, taking off the short bias, about 66.15s, taking off the going back, it's starting to lean long above that 66.60s, and things start thinking really up for a retracement trade to the upside. Now we're getting right up here to that 66.70 attractor area. That's kind of where we started this. Where we started this, or where we were building value the other day before they had that very nice retracement trade to the upside. Remember that? So before, if I move this higher a little bit, so this is the remember that NVIDIA earnings we were trading here. NVIDIA earnings popped it and then ran it up here. So that was the where we were trading before this NVIDIA news came out, and we were right back to that in F print. So we can stalling at that 66.60 to 70 area could very well happen if we start retracing. So there could be a reverse retest setting up there as well. We probably have plenty of time to consider that as the day progresses. But initially, I'm going to start looking at selling strength against that. Right now, 66.85 is where we're trading. 95s, 66.05s, 66.15s, taking off the short bias at that level. Still looking to get short against the 20s, the 30s, the 45s, up to that 60 level for rotations back down again. So above the 66.15, you have the 66.20s, 66.30s, and then 66.45s, 66.60s. There you have that. That's the whole area for looking for short setups. But again, above that 66.15, I'm going to be a little bit less aggressive and start looking for a retracement trade, and even try to hop on the long side if you can at that point. And if that doesn't materialize, if you just start seeing weakness, getting long against support, the ones you have in front of you right now, I would not be super aggressive at around 65.70. Probably start at 65.50, the 40s down to the 65.25s here for rotations back up, but not very aggressively at this point. This is, if in the bigger picture, you reverse retest, right? So you're looking at the lower end of the range. So you reverse retest in that volume edge right down there. So this whole area here, trying to get long against that area for rotations back up, is a valid setup. Just kind of had to look at that bigger picture to see it. But here you have it here you have a couple of high rotations. You have a couple of lower tests of it. This was the first one. This one didn't quite make it down, but this here you have that your real retest of that low from, this was from back from the October 28th, like 3 weeks ago. So they're retesting that level. Let's see if that holds. And if it does, yeah, we could have a pretty good update, you know. But if it doesn't, if they take it out, yeah, look out below, guys. All right, so that's how we get started on the ES. Looking at our NASDAQ. NASDAQ is also moving pretty crazily. Same story there. They've been down here in this lower area right now, flirting with it. Moving, getting my capital flow for the NASDAQ. Let me go this first. Drop this cap. These are huge screens. Again, these are like 4K screens, getting a fair amount of screen real estate on them. I like that. But here you have that reverse retest. Now NASDAQ took that out in yesterday's trading. They blew through that retest and all the way down here to reverse retest the volume edge instead. Because that didn't quite make it all the way down. But pretty good volume edge. And here you have your retest. A volatile retest for sure, but still a retest. So as long as they can hold the low now, if they start going below this area, the 23.8, 23.900s, yeah, well, we're going to be in some trouble. But so far, it looks like the retest, they bounced off that retest right now. And they're up here against the upper areas. But I would still look to sell strength on the NASDAQ, same as the ES, 24 240s, the 300s, up to that 377. So at 24 377, rotations back down again. And this is another volume edge right there. So this is the volume edge here you can see on the way up here, all right? That's the volume edge we were talking about before was way up there, the 25 360. So that's 1,000 points higher. That's the one we wanted to get past, but that's where we failed, and they absolutely creamed this whole thing. But you can see what a crazy day that was yesterday. So very brutal. And but look, the sell strength, I guess, against the 240s, 300s, 390s, above that 380, 390s. Look for a retracement trade. Still looking for short setups until we get up to these single prints again. The 24 640 is going to be that level, right? So you're still looking for shorts against the 435s, 490s, 540s, up to the 580s for rotations back down. And above 580s, I would start thinking about that retracement trade to the upside. They have this a couple of prints. I could make that a little bit wider. I'm just going to leave it as it is. So taking off the short bias above that 380, above the 580, 590, I believe it was. We're going to start leaning towards the long side. You see here, yeah, 570, yeah, 570, 580. Then we start leaning towards the long side, and then you start getting up in this other area here. So you have, I'm tempted to adjust the aggregation on this to compress it a little bit, but it's usually pretty good, but days like that, it just screws it off. But all this retracement stuff, this single print F could be pretty good retracement material. So I mean, that's definitely something to pay attention to. And here you have a small edge to pay attention to right there. There's a tractor area right there too. If he gets there, could be a nice move in there. All right. But anyway, so same dynamic there, starting off with a bias to the downside. We're watching it because it could be a retest failure. If this is a retest failure now, we could definitely have a nice retracement trade. But I would not be surprised if the day session is going to run it down here and at one point try to test these lows again. So that's kind of the dynamic I'm looking for. Now, if they start trading above the 380s on the Nasdaq or the 666.15 on the ES, we're taking off that short bias and going back range bound. Doesn't mean they can't run it down again after that, but we'll find out. All right, finally, bonds. All right, so the bond market. Here we have pretty much, well, they're a little bit to the upside. So there's a little bit of a slight to safety dynamic going on there right now, I would say. So there's some rotation into those. Not by any means as violent as I thought it would be. So you can see here how the bond market has been pretty calm the last period of time and not going crazy by any means. Right now they're up here above that 1716s, and they could certainly run it up here to the 118s or higher. But that just still keeps us in a range. But the fact that they're trading up like that kind of leads me to believe that there is a little bit of a flight to safety going on. So, but I would still trade it as a range bound. I'd probably start with a slight bias to the upside, looking to buy weakness against that 1703s, maybe down to the 1630s for rotations up. And then see if a bit below 1630, we're just flat back out, taking off that long bias at that point. And on the way up, looking for shorts against that 1716 and the 1722s for rotations back down again. They take out the 22s, just stay on the long side. It could be a trade up here against the 118s. Probably move that down. 118 is a good level to pay attention to. There. So 118 is going to be the next level up to pay attention to. All right, so that's the bonds starting off with a slight bias to the upside. Let's see if they to buy weakness. Let's see if they keep going or not. All right, so that's the bond market, fairly straightforward there. Back to the ES. And just a quick one on oil and gold. Here's your oil. Where's my gold? That's my oil. Hang on. Come on. Where are you? That's going to be my gold. All right, so here you have gold and oil. I'm just dropping them right in the middle of the screen here so you can see, but The one is trading around a little bit to the upside, trading around the 4,060. So still in the middle between that 41.30 and the 4,000. So still just range bound on gold and oil. Probably a bit to the downside here. We're down in the 57 now. So oil is a potential move to the downside. So that could be interesting. So I would stay on the short side on oil if you're going to trade oil. See how far they can look into sell strength at the 58.80, 58.50s, maybe up to the 59.30s here. But then again, I don't have any execution charts open on these guys. I'm just going to leave them as they are right now. So that's oil and gold. So I would be range bound on gold. It looks like that's the range bound market, and keep a slight bias on the downside on oil. All right, so that's kind of where we are. I'm going to be back. I am back on the ES, so I'll wrap it there for now, guys. So good trading. And we'll see you guys back at 11:30 for the next update. So we'll leave it there. And yeah, good trading, guys. I'll see you back at 11:30. Later.